number 26 of the Cash Rules Everything Around Me podcast. Number 26, we want to give a shout out to the greatest player ever to wear the number 26, Rod Woodson, the most famous, one of the best safeties all time for the Baltimore Ravens and the Pittsburgh Steelers.
Rod Woodson, I definitely remember him, hard hitting. Just like C.R.E.A.M 26 is going to be hard hitting. So thanks,
hard
Jason.
hitting.
Jason, now on the C.R.E.A.M podcast, you have a really important segment, and this is a video you did on YouTube a while back that we'll put the YouTube link in the show notes. But this is about important financial conversations you should be having with your families. Talk to us a little bit about that.
Yeah, during the holiday times, we usually gather around family and we like to have fun and celebrate each other's company, but it's important that we really do have some really important conversations with our family. So 5 of the important family conversations we should have are, one is, we see a lot of our grandparents, our parents are getting older, is who's going to take care of our parents as they get older? Is it going to be an individual, or are we going to pay for professional help? What's our game plan for our loved ones? Number 2 important financial conversation is, if something happens to one of us, where are all our important documents? I think oftentimes something happens to a family member and we don't know what they have or don't have. I think it's important to at least tell one family member where all those important financial documents are, and so that it's easy for them to grab it when something happens towards them. Number 3 is having that conversation about life insurance. If something happens to you, who should we be talking to regarding life insurance? 4 is retirement. Are your parents okay to retire? Are they going to need some help or assistance from their kids? Or the other way around? Do the kids need help from their parents as they're no longer being self-sufficient? I was at lunch today and I had heard a guy talking about how his kids keep draining him because he keep borrowing money. He cannot keep giving them money. So I think it's important that we have that conversation. And then 5, talking about what's the vision and goals for our family. Let's have a family plan on making sure that we don't have just being financially okay today, but we can take it to the next generation.
Yeah, that's amazing. Great conversations to have with your family while you're sitting down for Thanksgiving, dinner, Christmas, getting together with folks. And I know a lot of times we don't want to talk about money. We want to leave these things aside, and it's not good form to talk about them at the table, but it's important to schedule time with your siblings, with your spouse, with your parents, your grandparents, because even one conversation could save a whole lot of heartache and wasted money and set you up well for the future. Jason, now on the C.R.E.A.M podcast, we have a subscriber, listener, and viewer question. This is someone who's definitely into the C.R.E.A.M podcast, and they actually had a question about updating beneficiaries. So when we have 401ks, when we have stocks, when we have real estate, when we have crypto, any of these assets or investments, a lot of times people don't have a will, which is terrible. But even if they do have a will, do they also need to update beneficiaries and list beneficiaries with the actual investment, with the actual stock fund? How does that all work? What's your suggestion?
Yes. So all your accounts, you should have a beneficiary towards those, and you should get those updated every couple of years. Even if you have a trust or a will, the beneficiary on those documents overrides what the trust says. So for instance, give you an example, if you have a checking account or banking account or on your life insurance contract, if it has a beneficiary to somebody and not the trust, those funds will go directly to that individual and not towards what the trust may say. So even though you're in your second marriage, you have kids from your first marriage and your second marriage, if you never updated it and you just have your first children on that or your ex-spouse on those documents, it would go to them even though you update your trust and it says something a different way. So it's important that you review, update your wills and your trust every couple of years or whenever you're going through life-changing events.
Great information. I didn't know that, and I'm sure the person who sent the question and the listener will definitely appreciate your answer. Thank you, Jason. Now on the C.R.E.A.M podcast, we have my favorite topic, which is debt. Debt, credit cards, borrowing, definitely something that's eroding the net worth, the ability to form generational wealth, and just the means and paying bills every month for the average America. Debt is killing us, and debt is getting worse and worse in two different ways. Not only the interest rates and the APRs that we're paying, but the amount of debt we're taking out. So, Jason, I know you have some really interesting stats and analysis for us on that.
Yeah, so the Federal Reserve world inflation has driven up the average credit card APR annual percentage rate now above 20%, according to bankrate.com. That's the highest it has been in their database since it began in 1985, beating the previous record of 19%. So we're seeing the highest interest rates on credit cards of all time, which is crazy. The national average APR for credit cards has climbed by 2.74 percentage points so far this year, which is the biggest increase we have ever seen on record, according to bankrate.com. Now, the average annual percentage for retail credit cards are 26.72. So let's say this: you bought something for $1,000. And if you don't pay it off in a year, it's going to be $267.20. That is crazy. The average general purpose credit card is 22.66%. And then 11 credit cards, maximum APR is 30.7%, including Speedy Rewards MasterCard and Kroger Rewards World Elite MasterCard. Crazy.
Wow. So just to recap before you go forward with the other stats, the average APR now is probably well over 20%. There's a lot of cards that are 27%. People are paying 22%. And remember, this is APR, not your interest rate. So you may think that your interest rate is lower, or you're paying less. You may feel safe and secure. But if you add in the fees, the charges, all that stuff, your APR is actually higher, the true cost of what you're paying.
Right.
And then also we have 11 cards right now, and that's probably going to grow very rapidly at over 30%. If Vito in the shiny suit came and said he would break your knuckles if you didn't pay, and he was going to lend you money at 30%, you'd say no. But you're doing this on your credit cards, which is just nuts.
Which is nuts. And this is what they call usury, and how they get people as slaves towards paying off credit and interest.
Yeah, because that's a good point. Because of course, not only, it's not like, all right, $100 and I'm paying 30% APR, so I'm actually paying $130 for my purchase. That's terrible as it is, but people aren't paying off their cards in one shot. So when you're paying the minimum payments on a 30%, 20%, 25% APR, you're just throwing money down the drain. You're basically paying that purchase in perpetuity, and you're probably, it's probably going to be 10 years, and $1,000 to pay it off, or whatever the math comes out to. It's just insane. So people need to be definitely wary of that. The other aspect of our conversation is that not only are interest rates and APR skyrocketing, but the amount of debt people are using and charging has gone up like bonkers over the last month. So tell us about that.
Yeah, so consumer borrowing in September increased at a seasonal adjusted annual rate of 6.4%. And revolving debt, which includes credit card, grew by 8.7%. And then non-revolving debt, which includes auto loans, student loans, increased by 5.7%.
So people are turning to their credit cards again, whether it's inflation, the holidays, they're running out of cash as the economy turns, and as, jobs slow down and it's not white hot anymore, people are trying to keep up. So that's a huge problem. I'd definitely recommend anyone who's got a credit card balance to pay that off. That could be the best Christmas present you could ever give yourself, huh?
Right. I always recommend, if you can't pay off your credit card in like 2 months, 2 or 3 months, maybe you should consider doing a personal line of credit. The rate's going to be lower for you. You put yourself in a game plan to pay it off, compared to if you're just paying those minimum payments, or you get yourself in a credit card trap and you can't get yourself out of it. I definitely recommend that.
Yeah, and don't get a personal loan to consolidate at a lower rate and then go out and spend up on the credit cards again. You need to change your habits, whether it's not having your credit cards on you, or having it in a safe place where you're not going to use it, or some sort of limit. Or I'm a big believer. I use my credit cards, but I log in daily I check all my bank accounts, all my finances, all my investments, all my PayPal, everything, credit cards. I check every one of them every single day. It takes me 3 minutes, right? Just log in, boom, 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 check it. Not only does that alert me if there's any sort of fraud or fraudulent charges, which I've seen before, or any funny business, but then you're just more conscious of it. And I'm like, all right, let me pay this off. Let me pay this off. I'm paying things off. If I do charge hotels, airlines, big ticket items, I pay that off before the 30 days before the interest is even charged on it.
Right. And what people should really consider is, and I think this is going to hurt a lot of people, is they thought they were going to get the student loan forgiveness. Now that's been blocked by the courts. So I hope you didn't think, oh, I'm getting my student loan forgiven and I can spend this money. No, you better start clamping down because all debts are due. The EIDL loans are due. Student loans are due starting in January. So don't get caught up in the holidays so much and don't think these loans that you got during COVID are going away. They are here to stay for the American people.
Great point. Great point. I didn't even think of that. Yeah, well done. Well, yeah, thank you, Jason. And hopefully people get responsible with their debt very quickly. All right. Now, Jason, we're talking about money. We're talking about the rich, but there's levels to this. And there's the rich, and the rich, or we call them the super rich. And those are ultra high net worth individuals worth over $100 million. I know you're only worth 99 million. I know I'm only worth 99 cents, but you had some interesting stats for us about ultra high net worth individuals.
So the country with the number one ultra net worth individuals is the United States with 20,600 people, where China comes from a far, far behind at number 2 with 7,800 people. And Taiwan, which is outside of China, a little island, they have 1,300 people. And we always talk about these Russian oligarchs, but there's only 500 ultra wealthy oligarchs in the world. And you know what's interesting stat I'm looking at and really looking into this is India only has 800 people, and this year they're estimated to surpass China for the most populated country in the world.
I saw that. Yeah, I saw that. And so we don't have the full data here, but a couple things we could try to glean or assume from this is that you have a bigger separation of wealth. You know, that they may be over $100 million, they may be 500 million, 300 million. So there's still a lot of wealth in India, in China, in Taiwan, but it may be in the hands of fewer. I know that's a big complaint, that the middle class is dissolved and the rich are getting richer here in the United States, but it may be even more so in these emerging countries with giant populations like China and India, and then Russia as well.
Right.
By the way, it's sort of related, but not really. Speaking of China and India, just recently, I think this last week, it's estimated that the world gained their 8 billionth person. So now instead of 7 billion people in the world, there are officially 8 billion people in the world.
Wow.
I don't remember when we were growing up. What was it, like 5 billion or something like that?
Something like that.
Yeah. Pretty crazy, huh? And like I like to point out, they're all in line in front of me at the grocery store when I only have one item to pay for. All 8 billion of them. Well, all right, that's some great info on the super, super rich. And Jason's going to be on that list soon. I'll be on that list about 500 years from now. So we're both sitting pretty. All right, Jason. Now we're talking about uptown problems, downtown problems. No matter where you're from or where you're at, you're going to have certain problems when it comes to money and finances. It's just you replace one set of problems with a different set of problems. And to wit, you have a chart with the biggest financial concerns of affluent Americans. So what are you seeing on that chart?
Yes, number 1 on the list is I'm concerned about being financially secure in retirement. Number 2, I'm concerned that I have not properly tax optimized my portfolio. And number 3, I'm concerned that my portfolio won't withstand a market downturn.
Interesting. So those are the top 3 concerns of affluent Americans. Basically, am I set up for retirement? Are my taxes all set? And if and when the market turns, how am I positioned?
Exactly.
And I know further down on that list, but there's some things like worried about losing wealth, of course, worried about um, children's college,
Am I
worried about
spoiling my
children being
children?
spoiled. Yeah, that's a big one, right?
Right.
If you're affluent and if you have some money, it's like, how do you walk that fine line of making your kids work for things and helping them out, but not just giving them everything?
That's a huge one. I know I went to a few college tours, not college, but just elementary and high school tours. And that's one of the things is how can we make sure, even though our kids are, have this wealth behind them, that they are, how do we keep them humble? And so they try to really teach it.
Oh, that's great. Well, interesting information. And no matter where you are on that scale, uptown, downtown, midtown, you could come to Jason and talk about your financial concerns and he could help you out. So, Jason, now we're going to shift focus from Wall Street and finances and debt and credit cards to a topic closer to home, literally closer to home, because we're talking about real estate. And something that's emerging, especially in California, is ADUs, accessory dwelling units. And this is basically taking an existing residential property and adding an outbuilding that's a studio, that its own autonomous apartment, or converting the garage into a separate living space, a basement into a separate living space. And you could rent these out. You could put a family member in there, whatever you want to do, but it is its own self-contained living unit, housing unit. So talk to us a little about ADUs and how you see them filling a need with the housing shortage in California.
Yes. So ADUs, I like to say old school grandma or inline units are becoming very popular in California, especially, but the United States are growing because there's a housing shortage. And one of the issues with the housing shortage is how can we build enough homes on so much limited space? And one way we could do that is, especially in cities like San Francisco and Oakland, where space is limited, is by building ADU units where people might have these huge plots of land or good sized lot of land for their property and building a unit in the back, which is great, I think, in so many different ways. One way is keeping families together that are generationally changing and shifting. So you're allowing you to have multiple generations close to each other while keeping their independence as well. So your mom might want to move in with you, but you don't want her to be right next to you. And she might want her own space. But the good thing with the ADU unit, yes, she is close. Yes, she can stop by in less than 2 minutes, but she has her own privacy and you do as well as a family, which I think is a really good way to do it. Now, if you want any other additional information, definitely check out houseable.com/ADU-guides ways for looking at ADU units.
Yeah, fantastic. ADUs definitely provide a great solution. So good information and definitely solve a problem. Thank you, Jason. All right, Jason, with the holidays and Christmas coming up, we talked a little before about curbing back on gift giving, big purchases, racking up credit card debt this year in this holiday season to be financially savvy. But what are some things you can give your kids to help them with their finances this Christmas season?
Yeah, great question, Norm. I have top 5 things that you could do for your kids for the holidays. The first thing is a 529 plan. It's a great way to save for college and higher education for our children. Number 2 is if your kid is working for you or if your kid has started a job, open up a Roth IRA. The good thing is you can put that money in there into the account. The money grows tax deferred, and when they pull it out, it can be tax free. They can use it for higher education. They can use the first 10,000 for the first home, or it can be a great retirement vehicle. Number 3 is think about using a I bond. Donate or gift your kids a I bond. We have seen interest rates higher than we have ever seen before, and there might be a great way to consider doing an I bond. Go to U.S. Treasury Direct and consider doing an I bond for them. Number 4, think about getting a life insurance policy on your kids. It might be a great way to save for your kids for the long term is by looking at getting a cash value life insurance policy. And then number 5, educate your kids. Give them a book. Give them The Richest Man in Babylon. Give them Rich Dad, Poor Dad. And here's a bonus one. Get the board game Cash Flow. I get the board game Cash Flow. It's by the guy who wrote Rich Dad Poor Dad, Robert Kiyosaki. It is a fantastic game to play during this holiday season to teach your kids about money and building wealth.
Oh, that's some great information. Some great recommendations for this Christmas holiday season. How you could set your kids up, give them education, but not spend recklessly on stuff that they don't need, right? Or on credit cards at the mall. So thank you for that, Jason.
You know what? I definitely want to give a shout out to Joshua's Gift. Joshua's Gift, as you guys heard me talking about them in the past, is a great nonprofit for people with autism or have children with autism that are on the spectrum. Next month, they're doing a toy drive for all children who are on the spectrum. All they have to do is sign up and register on their website, joshuasgift.org, and you can come by, have your kid pick up a toy and be with the other kids on the spectrum for free. Once again, I want to give a shout out to Joshua Gift for the great work that they're doing.
Fantastic, Joshua's Gift. I know you talked about them before. Wonderful organization. And now with this toy drive, I'll put a link in the show notes, and everyone is encouraged to give, and support them. Thank you, Jason.
Thank you, everybody, for watching episode number 26 of the C.R.E.A.M podcast. If you got something out of it, if you liked it, if you enjoyed it, make sure you share the content with your friends, family, and the whole world as we try to grow our subscribers list. Thank you all for watching C.R.E.A.M episode 26.